Trump Media Technology Group soaring ahead in the first session as a publicly traded company. Abigail Doolittle has the details on DJT. Abby.
It's pretty amazing. Just moments ago, it was up 58%, currently up closer to 30%. But either way that you take a look at it, absolutely soaring on its first day of trading. The Trump Media and Technology Group, after its post-SPAC debut, they basically did a SPAC merger with Digital World Acquisition, as you mentioned, the new ticker DJT. Difficult to forget with the former president, his initials, of course. And it gives the parent company of Truth Social more than $275 million in capital, a win for Trump amid legal and financial woes, we should say.
By the way, you see the resumption of trade on DJT there, now up some 34%. Jim, in terms of...
Wow, I mean, look at this, will you?
What's that?
No, the DJT. I mean,
Donald J. Trump is now president of the United States. President Obama is the ex-president. And Mr. Trump, for the moment, steps away for the inaugural
What a great
address.
honor to be able to introduce for the first time ever anywhere the 45th President of the United States of America, Donald.
Coming up today, Trump's stock soars on the first day of trading, taking his wealth to an all-time high. Will short sellers come after him, or will the meme crowd take hold? The collapse of the bridge in Baltimore, Bitcoin's new threat, and your Easter eggs just got a whole lot more expensive. And we're continuing to see a bit of a pullback in the short term in the market here. Still haven't broken this tight channel yet, but you can see here on my sector trends table indicator, a lot of the growth sectors underneath their 5-day moving average. S&P, NASDAQ, semiconductors, discretionary industrials, growth versus value, and the momentum factor. Also got volatility, oil, gold, healthcare, and the dollar index holding up in the short term as well. So a little bit of a rotation out of growth. However, they're still all above their 20-day moving averages, so nothing too serious just yet. And even though all the indices finished down today, led by the Magnificent Seven, collectively down over 1%, the meme crowd is still well and alive. We've got Reddit popping up huge today, getting up to almost $75 a share before turning back, but still finishing up almost 9%. Even got a stock that sells donuts, Krispy Kreme, popping up 40% today on the back of news of partnering with McDonald's. Not to mention we've still got a stock that sells chicken wings, trading at over 150 times earnings. And there's a look at your advancing leaderboard there today. Krispy Kreme out front. Still got some action in the cannabis sector. And other food stocks doing well. Domino's Pizza popping up. Chipotle, and a bit of a bounce back in Tesla, which has been weak lately. And there's a look at your heat map on this relatively quiet Tuesday day of trading. So Nvidia took a little tumble today with the semis. Bit of a pullback in utilities. And like I said, a little bit of a defensive rotation with healthcare stocks popping up there. And there's a look at Nvidia there, pulling back a bit there today. But the big story today everybody's talking about is Donald Trump's stock being converted from a special purpose acquisition company, a SPAC, into a legitimate stock trading on the NASDAQ under his initials, DJT. And it gapped up above $70 a share and is going down to a 15-minute chart. A lot of excitement early on, then it kind of plateaued and turned down into the close, but we're bouncing up back again after hours as I speak, currently trading at $62 a share. And so this changes things a bit for the US presidential race, and therefore by extension markets. Governments are the biggest influencers in markets. They can manipulate things more than anyone else, and it's kind of amusing to watch. A lot of people trying to take him down and out of this race. However, he just appeared to get his bond payment down from a record $500 million. That was coming from the New York Attorney General, accusing him of lying about his assets to obtain loans, even though the bank he apparently defrauded testified in his defense and said it would love to do business with Trump again. There were no victims, and the finance helped him develop New York City properties. And in comparison, Sam Bankman-Fried, the mastermind behind FTX, who defrauded investors out of billions of dollars, his bond was $250 million, and the largest fraud of all time, Bernie Madoff, his bond was $10 million. And so it looks like he's winning this battle, having that bond reduced down to $175 million, not to mention getting his SPAC approved to become a stock, of which he may be able to sell shares in soon. He owns 60% of the company, or he could borrow against, someone could back him, finance it, and apparently he's going to be able to pay that bond in cash, so his properties won't get liquidated. He's going to be staying in this race, and since we have a bit of a clown market, meme stocks ripping up like Reddit, trading on 10 times price to sales, even though it's been around for 20 years, doesn't make a profit. Did over $800 million in revenue last year, with insiders taking out more than $250 million for themselves. Trump's company as well doesn't make a lot of money. However, that doesn't really matter these days. It's all about investor hype, sentiment, liquidity, short squeezes. And so Trump now, with his company, is a meme stock. And even though the mainstream media, who of which are writing a lot of hit pieces on him and his stock, it's just doing the same thing everyone else on Wall Street is doing. And so the board of Trump Media and Technology Group are likely to give him generous compensation package bonus shares, and he could get up to an additional 36 million shares, which would lift his stake to almost 115 million shares, currently worth about $8 billion. So even though the other side is not done with trying to take him down, there's new stuff coming out all the time. They're going to play it every which angle they can. And some are saying he may be vulnerable to being attacked by short sellers. I'd agree with this article that that's a super risky trade. For sure, the stock is likely to be volatile. We're likely to see big swings up and down. However, it could become the mother of all short squeezes as well. Given his cult-like following, a lot of loyal followers who, like a lot of these meme stocks, don't really care about the underlying business performance. It's all about buying what they want to buy and what makes them feel good. So at the end of the day, he's still well in this race. Sports betting books still have him around 48% chance of winning the election come the 5th of November. With Biden still got his work cut out for him to prove to Americans that even at the ripe age of 80 years old, he's still fit for office for almost another 5 years. And just going back to the second hottest stock of today, social media company Reddit, already trading double their IPO price. Stock has been set up to be squeezed higher. And there's the 1 hour chart of it so far. And I was thinking about this today, since it has such a low float, only around 20 million shares. Obviously, every meme stock trader and his dog watching this thing, what a perfect opportunity it would be for the big algos, hedge funds, who I'm sure collaborate together to orchestrate a squeeze in this, knowing that the more this goes up, the more meme traders are likely to pile in on top of them. Since it has so much attention and eyeballs watching it on this low float, even though we did a bit of a shooting star candle here today, this thing could still go crazy, just like Donald Trump's stock. It's just the environment we're in at the moment. And so even though Wall Street analysts aren't getting too excited by Reddit stock, rating it a neutral, it's already trading on a more rich valuation than all other social media stocks. Plus, we just got news out of Florida. They're introducing a law banning social media for minors under 14, meaning they can't have any social media accounts until they're over the age of 14. And then from that age, they can obtain a social media account with parental consent. So there's a lot of science and data showing that social media is a lot more detrimental for young people's mental health than most people realize. Ever since social media has exploded since 2010, we've seen sharp rises in depression, suicide, confidence and self-esteem in young people, of which behavioral scientists largely point to social media as being the main culprit. We've even got billionaire investors like huckster Chamath Palihapitiya, who made most of his fortune from the biggest social media network of them all, Facebook, even coming onto Twitter X today, saying as parents with teenagers, being the bad guy by limiting their social media has been a path to exhaustion and constant bickering. So having the government back me up and do the obvious and sensible thing will give me, as a parent, more reinforcement when not giving my kids social media until 16. Frankly, I'm going to try and limit it until they're 18. Again, just another sign of the clown world we live in. Guys made all their fortune off social media, trying to make it as addictive as possible for young people. Now coming back to bite him as he's living with those own side effects in his own house. However, that's the way it is, and there's a look at Meta today, closing down 1.4% on the back of that news, but still well and truly in an uptrend here. And just looking at its fundamentals, still holding up pretty good as well. Only trading about 20% above what my stock fair value indicator has it at, but given its monopoly in the industry it operates in, I'd say it well and truly deserves that 20% premium. So you could pretty much think of Meta being at fair value right now if its growth rates and profit margins can hold up. And even though we've got stocks, property, cryptos, other risk assets at all-time highs, many consumers aren't feeling that great. We saw that today with consumer confidence dipping on more pessimism about the future of the economy. However, that doesn't really matter as the gap between the have and the have-nots continues to accelerate to all-time records, with bulls saying there's still a 34% gain left in the S&P 500 by the end of 2026, and that we're only in the middle innings of a long-term secular bull market. With some research showing secular bull markets can often go for 20 years, and that this one started in 2013 when the S&P 500 broke out to all-time highs, which means this could run until 2033 before we have a proper bear market. And in this easy money environment, the Fed's scrambling to backstop any problems in the market, more government intervention than any other time in history, not to mention more participation. It very well could do this indeed. And who knows, may even turn into the mother of all bubbles, S&P 500 at 10,000 and crypto at 1 million. All of this is possible in this current environment simply because the market's just not allowed to turn down and stay down for too long. Not only that, but in this great risk-on, high-momentum environment, got the Fed pouring fuel in the fire saying they're going to cut rates in a few months, even though we're nowhere near 2% inflation, not to mention the huge amount of embedded inflation over the last 3 years, not just looking at month to month. We even got investors buying bonds at record clips to lock in these high yields, because when the Fed cuts rates, that's going to make bond prices go up, because the current bonds that they hold will be worth more, given that they have a higher coupon rate. So we shouldn't be surprised to see inflation stay pretty sticky for years and years now, with some even saying the Fed has completely changed their culture and 3% is the new 2%. And just remember that inflation is a tax on the working poor. Because if you look at the percentage increase on low-income families, they've had to pay for their necessities. They're paying about 30-40% more of the same level income just to live, basically. However, for the wealthy, top 1%, Jay Powell and his mates, that effect is pretty much non-existent. Their cost of living relative to the income hasn't even gone up 1%. So currently the stock market's in a feel-good mood, but what happens if inflation data keeps coming in hotter than expected and it becomes so obvious that Jay can't actually cut rates because it'll be too much of an obvious political maneuver, not to mention helping out the Treasury and the corporate sector to refinance? Then that should be a big problem for the stock market. And we could get a taste of that this Friday when we get personal consumption expenditures, PCE data come out, and that's on a day where the markets are closed in observance of Good Friday, and we get to hear from Jay Powell as well. Could be pretty interesting going into the weekend. And there's a look at the 2-year yield, kind of just going sideways this week, 4.59, 10-year 4.23, and there's the bond market kind of just stuck in a route, going sideways, not really knowing what to do. Wants to go higher because inflation's not cooling off as much as everyone had thought it had been, but Jay Powell's still indicating he wants to cut rates. So there's kind of two big opposing forces there. And there's the market for high yield bonds. Kind of just pressed up on that resistance zone in Thursday trading, but just pulled back a little bit from them along with the overall market and growth sectors as well. And just as a reminder, I'm running an Easter special. If you want to get lifetime access to all the custom indicators you see me use in these videos every day, then head on over to my website, clickcapital.io, click on the big red banner, and you can get lifetime access for the one-time fee of $239, which also comes with a 7-day money-back guarantee in case you change your mind, and also gives you future access to all other indicators I make, along with automatic updates of my existing 25 custom indicators. And if you want to learn more about the indicators, then go to the indicators page and watch the 25-minute video on there in which I show you in detail how to best use all the 25 indicators. And so I've been a premium member on TradingView for 9 years. I've spent thousands of hours coding these indicators. They're unlike anything else you'll find online. I use them every day to manage my portfolios. And this is all I do for a living: trading, investing, and running Click Capital. I don't have any other jobs or anything like that. And so you can be sure that I'm always doing my best to make these indicators as effective as possible. And I just want to say thank you for everyone who's purchased them, because you're not only getting yourself some awesome indicators for life, you're also helping to support me and this channel, as I spend about 4 hours every day making these videos, and YouTube ad revenue doesn't pay very much, enough to cover the cost of a couple of beers at the end of the week. So if you're interested in learning more about that, click the link below this video and take advantage of this special offer just for a couple more days only. Just getting back into the daily review, I'm sure you all heard about the collapse of the Baltimore bridge after a container ship accidentally hit it. They did give out a bit of a mayday warning just before they hit it, allowing authorities to block the bridge. Luckily, it was only at 1:30 in the morning. There's still a search underway for 6 people, hopefully no fatalities. However, when it comes to Wall Street, people are talking about what sort of effect it could have on supply chains, disrupting one of America's most busiest ports. What could it do to inflation, etc., etc. I wouldn't call it a nothing burger. However, it should be pretty much to no material effect. It's only the 17th most busiest port in terms of tonnage in the US. They've already rerouted everything, so I don't think it'll have a material lasting effect on anything other than the local Baltimore region for a little while they repair it. Moving on to Bitcoin today. It's still holding ground, steady above $70,000 a coin. You can see that in the daily chart here of Bitcoin, defending its 50-day VWAP pretty well. Still got momentum in this market. Same deal with Ethereum, reclaiming its 50-day, kind of just hanging in there. However, what didn't make it onto mainstream news today, and not a lot of people know about, is the developments from the SWIFT payment system. I'm sure a lot of you know about SWIFT. It's the main interbank messaging system for making cross-border payments. Not only that, but for general messaging, transactions, treasury, trade deals. It's been operating for over 50 years, used by thousands of financial institutions across more than 200 countries. It is the dominant global payment system, and they've been working really hard to bring their decades-old payment system into the new modern age, and they're currently going through some updates over the next year that is going to allow for the seamless introduction of central bank digital currencies for cross-border transactions. So basically, and like I've been saying for a while, CBDCs, along with SWIFT, are going to match all of the advantages of crypto and Bitcoin. That's kind of seamless, cross-border transactions, speed of transactions, digital wallets, so on and so forth. However, it won't be with the risks of private currency. So in my opinion, I think cryptos While Bitcoin's likely to be around for many more years, its valuation is the key of debate because cryptos could become just like over-the-counter stocks, where it's a more muddy, less vague, less transparent market, and then CBDCs could become like the New York Stock Exchange, the NASDAQ, the regulated government-backed financial instruments that have all the same mechanics and functions of Bitcoin. But instead, if you get hacked, you'll be backstopped by your bank and government, and if you happen to lose your password, you won't lose all of your money, like is currently the case with Bitcoin. And so I think the higher Bitcoin goes up, the more and more the government is going to expedite things like this, and central bank digital currencies are inevitable. So it'll be interesting to see how Bitcoin will compete with them, even though no one's really using Bitcoin to buy day-to-day things. It's just really a speculative asset. Nonetheless, just looking at a monthly chart doesn't mean things can't go crazy before then. We could still easily hit $100,000 this year, and who knows, maybe even more crazy than that. Definitely the momentum trade right now. Not only that, we've got the duopoly in credit cards, run by Visa and Mastercard for decades now, coming under attack as they just agreed to lower fees and settle a long-running lawsuit. And I don't think their huge fees and basically running a racket on credit cards is going to last forever. Been getting away with it for so long, often charging merchants fees around 2%, not good for the consumer. And with the advent of central bank digital currencies, a push from PayPal and others, even Elon Musk's X going to get into payments. Let's not forget he helped to found PayPal and has ambitions to turn X into the everything app. I'd say Visa and Mastercard businesses are kind of prime targets for disruption, with so many investors still absolutely in love with these stocks, and it's easy to see why they've been conditioned that these monopoly stocks do nothing but go up. There's a long-term monthly chart of Visa and Mastercard as well. Collectively both worth almost $1 trillion in market cap, while PayPal, who you could kind of think of as the bank of the internet or a digital bank, market cap is $71 billion. They've been smashed down the last couple of years. And even though it's still not out of the woods yet, I believe PayPal is undervalued. My stock fair value has it at $82 a share. And this indicator looks at a lot of things, not just the company's assets and liabilities, its growth rates, but also it looks at Wall Street analyst earnings expectations going forward and a few other things to come up with a fair value. Whereas it's got Mastercard as being overvalued by 45% and Visa overvalued by 34%. That's why I like the spread trade, long PayPal, short Mastercard. That's been performing pretty well the last couple of weeks, and I think could still have a lot of potential to run over the next year or so. And if you thought you're going to have some cheap chocolate Easter eggs, you might have to think again. Price of cocoa just reached an all-time high above $10,000 a metric ton on the back of bad weather and crop disease coming out of the major West African producers where most of the world's cocoa comes from. Not to mention it's turned into a bit of a meme stock here. Everyone has piled on, causing the trend to exacerbate. Now almost 60% above its 50-day VWAP. And there's a look at the long-term monthly chart. And for those of you new to commodities, they can do this every now and then. Commodity prices can get huge squeezes on the upside. However, there's an old saying in commodity trading. The cure for high commodity prices is high commodity prices. That's because when commodities are selling for this rich, farmers take note of that. They're watching these commodity markets, along with big commercial producers as well. And so it's an easy trade for them. If they can grow cocoa, they will. All they got to do is come into the futures market, sell as many contracts as they want, lock in this price. So even if the underlying market falls down, they'll sell their physical inventory 6 months, 12 months, 2 years, whatever it is, and they've already locked in this price. So if the commodity comes down, they'll have made a huge profit on their short futures position. So that's called producer hedging, why futures will set up in the first place. But obviously speculation has taken over, and that's where most of the volumes come from. So shorting, it's crazy, could go even further, but it's almost guaranteed to come back down over the next 6-12 months. Be very surprised if it was still there a year from now. Either way, for chocolate lovers like myself, we're going to have to cough it up this Easter and likely for the next year or so as well. Moving on to economic data we got today. Durable goods orders coming in a little better than expected. American home prices increased 6.6% year over year. There's consumer confidence coming in lower than expected. Not much out tomorrow. Just get a look at crude and gas inventories. Going into Thursday, GDP data, consumer sentiment, and then Friday when the market's shut, PCE, and we get to hear from Jay Powell. Do his best to try and justify why he's going to cut rates while still paying lip service that inflation is not where he wants it to be. That's why Fed Fund futures still pricing in 70% chance he's going to pull the trigger in June and start the cutting cycle for the first time since 2020. Greed index is still greedy at 67, and corporate insiders gone off the Easter holiday early this year, doing not much trading on both the buy and sell side. As the VIX just holding ground above 13, gold just rolled over to a new contract, currently trading 2200. There's crude at 81 a barrel. Chinese securities still holding ground above the 50-day VWAP. Clean energy coming back down to test these lows. And international stock indices looking like the S&P 500 going parabolic. There's the FTSE breaking out. German DAX walking the line. Same with the Euro stocks. The China 50, one of the strongest markets over the last year. Nikkei 225 and the Aussie 200 just kind of drifting higher as well. There's a look at cannabis ETF. Just holding above the 50-day VWAP. Still waiting to hear some positive news from the DEA on that one. Apple's still soft, under 170 a share, and a little bit of a bounce today. Tesla doing its best to hang in there, building a bit of bullish divergence on the DSI. Looks to be a little bit of institutional buying. However, I'd say it's still got some work to do, make a higher high to at least put this in to a consolidation. Latest look at DJT after hours up 7.6%. The other hot stock, Astera Labs, found new highs today before pulling back. Reddit pulling back a little bit after hours, and Krispy Kreme still trading up after hours. And a pretty good day for the old economy hot stocks. Vertiv trading up, Wingstop, Abercrombie and Fitch still lost its 50-day from yesterday though. And the big banks still holding in there, not too far off from their all-time highs on JP Morgan. Alright guys, there we are for this Tuesday, and what I suspect is going to be a pretty quiet week, short trading week. We don't get the data out until Friday, in which the market's closed anyway. Be surprised if we get any big moves before then. Even though underneath the hood, things like Trump stock, Reddit, meme crowd's still well and alive. The overall market's pretty sleepy here. Low volumes, low volatility, and I imagine would stay that way going into this long weekend. Thanks very much for tuning in and hitting that like button. I'll see you again here tomorrow night. Cheers.